take risks. If you win, you will be happy. If you lose, you will be wise. Guys, welcome to your channel. My name is Karan, and in today's video we will talk about 8 strategies to reduce your investment risks. So in the previous video I discussed what risk is all about, different type of risks, how to manage them. In today's video we will talk about strategies to reduce your risk. Let's get started. Point number 1, to understand your risk tolerance. Risk tolerance is nothing but how you behave when your investment functions in a particular way. When stock market crashed, your mutual funds went down, your value of stocks went down. Were you reacting positively or negatively? Were you in a panic mode, or you were okay? You were giving time to the market to bounce back. Were you holding yourself strongly? That is your risk tolerance. You have to understand, can you tolerate risk? If you just cannot tolerate, if you are unable to sleep, maybe you can go for less risky products like a fixed deposit or a recurring deposit or public provident fund. Okay, because when we talk about investments, it's all about risk. We get rewarded for the risk which we take. It is being said in the stock market that the volatility in the market is it is the fees. Market demands that fees from us. So point number 1 is to understand your risk tolerance. Only then we can reduce the investment risk. Fair point? Let's go to point number 2. Guys, point number 2 is keep sufficient liquidity in your portfolio. With that I mean you should have some assets which are liquid, some amount of liquidity. For example, in case of any emergency, you can quickly sell it off and get out of the problem. Have some emergency fund prepared for yourself. At least 6 months of your expenditure should be kept in an emergency or a liquid fund, maybe a fixed deposit or a recurring deposit, something which is quite handy and you can withdraw in the term of in the case of a need, right? So that covers 2 points. Point number 3, what is your asset allocation strategy? To reduce risk, we should have a asset allocation strategy. What are the assets? Your fixed deposit, your RDs, your national pension schemes, your Sukanya Samriddhi accounts, your LIC policies, your mutual funds, your stocks, your bonds, your gold, your silvers, assets. You have to think where you want to invest your money. Basis your life situation, basis the money, basis your risk tolerance level. If you are younger, maybe put more in the equity and less in the debt. And as you grow older, you are approaching towards retirement, put more in debt and less in equity. Similarly for gold, real estate, etc., etc. That is your asset strategy, asset allocation strategy. You have to think like a businessman. You are a businessman. You are a strategist. These assets are available with all of us. So we need to give ourselves support. You have to support yourself. Your money should be distributed among all these assets, right? Okay, point number 4 is diversity. Diversify your investments. For example, you have 10 assets. Let's say one of that asset is mutual funds. Even in mutual funds, there are different types of mutual funds. Debt mutual funds, equity mutual funds. In equity mutual fund, there are a lot of mutual funds. Large cap funds, mid cap, small cap, diversified, balanced advantage, international, IT, thematic funds. Guys, I don't want to confuse you, but you have to diversify your investment. The more you diversify, the more safe and secure your investments will be. So just take for example a mutual fund. You want to make money in the long term in using a mutual fund. So put some money in the large cap. They are safe and secure. Maybe a flexi cap. They are safe and secure and they will give you a decent return of 10 to 12%. Okay, that is diversity. You are diversifying your investments. Okay, point number 5. You have to focus on the time you spend in the market. Do not try to time the market. Let's say if you see stock market is going down, you will invest more. If the market is going up, you will invest less. No, no, no. That's not the right way. We have a strategy, a concept called dollar cost averaging. Okay, in India, you might call it rupee cost averaging. Wherever the market is, keep on investing small amounts every month. If you are going through a systematic investment plan in a mutual fund, put small amount every month so that some units you will buy for higher price, some amount you will buy for lower price. In the long run, you will average out and you will make a decent your 10 to 15%, right? That is how you will not time the market. Do not time the market. Focus on spending the time in the market. Market wants you to spend time there. Forget about markets. Nobody can time the market. Okay. Point number 6, do your due diligence. Okay, we have watched a video, we jump right into the investments. No, you have to plan, think, maybe consult a specialist, your chartered accountant, your broker. I do not know. You have to do your due diligence. Everything cannot be invested in one go. If you have a lump sum, it is being said that you divide that lump sum into monthly inflows. Okay, if you are investing in stocks, okay, so you have to do your due diligence, do your planning. Point number 7, to reduce your risk, is invest in blue chip stocks. Guys, we have in India, we have Sensex, where we have the 30 top companies. We have Nifty, which has 50 top companies. So if you want to reduce your risk, investment risk, you can stay in that. Maybe buy a index fund, Nifty index fund or a Sensex index fund. They are investing in the market as per the indices, right? So if you stay with the blue chip, even if you buy individual stocks, I have few stocks in my portfolio. I have burned my hands, so now I'm just investing in blue chip stocks. So you can pick up stocks which are part of our index. Pretty safe, pretty safe. Okay. Last point, guys. Point number 8. You have to monitor your investment regularly. Very much common sense. You are putting your hard-earned money into investments, mutual funds, stocks, bonds, etc. At least once in 6 months, you should review your investments. And if you think you are not getting satisfactory results, maybe consult someone who is an expert, right? So these are the 8 points which I wanted to discuss with you guys. My 8 strategies to reduce investment risk. They are powerful, very powerful. Review the video once again, digest it, take charge of your finances, of your investments. It is not difficult. You just need to be there, just need to be present. Take guidance, seek help wherever needed. Right, guys? Enjoy the journey, guys. Have a great time. I'll see you in my next video. Have a great day.